Well, that sums up the day quite nicely. The kind of day trade we've seen has been anything but nice because the weekly Nifty expiry pressure was weighing on the market. And pardon me, it's not weekly, it's the monthly Nifty expiry pressure that was weighing on the street. You've got a cut of about 0.3% on the Nifty. We've recovered from the day's lowest point, no doubt, but it's been a very nominal recovery of about 30 odd points, and we've closed under the 23,900 mark and barely above 23,850. So that's a level that we have to be watching out for very carefully. On the sensex too, the cut has been to the tune of 0.3%. The broader end of the market has done wonderfully well for itself. Good show of strength coming in from there because the Nifty mid cap was up 4 times. The Nifty small cap index was up about 0.6%. So good moves coming in over there. On a sectoral basis, the biggest casualty of the day was the IT index, cuts of close to 3%, 2.7% trim off over there to be precise, followed by media, PSU banks, FMCG, banking and metal. On the flip side, it was Nifty defense that was the day's top gainer, followed very closely by Nifty Realty, auto, oil and gas and energy. While that is the kind of roundup that we've seen for the day, you had names like Maruti Suzuki on the back of the Jefferies upgrade, Shilpa Medical, like we were discussing, on the back of a DAM capital note and a European partnership, strengthening those names. Some of the EV stocks on the back of the Delhi EV policy were in focus, like Ather. Ola Electric was up 9.5%. You had some good moves coming in on Atul Auto. So those were some of the stocks that were in focus. But while that sums up the day, we're on the last day of the month, and time to sum up the kind of moves we've seen for the month. Given everything we've seen, remember the first half of the month was deeply under pressure from the geopolitical aspect, but then the second half saw a lot of resolution, a lot of positivity on the geopolitical front. So to sum it up, it's not been a bad month at all for the market because, believe it or not, Nifty has advanced 1.5% this month, led mainly by Interglobe Aviation and Max Healthcare. On the Nifty bank front, that index is up 6%. You've seen lots of CFO changes coming in. Bank, IDFC Bank were the top gainers from there. So it's the smaller end of the private sector banks that have done well. More than 50% of the mid-cap and small-cap stocks have ended the month in the green. So that's another big positive from the SMID basket as well. Of course, you had Nifty IT, that was the top sectoral loser, down 9.5% in the month gone by. Persistent Systems, the big cut on the back of that Nagaru deal that the street did not perceive well. And Wipro, both of these stocks have led losses. Nifty Metal snapped its 2-month gaining streak. Big pressure on Vedanta and Nalco. So was the case with Nifty Energy. Nifty Realty, that is one segment to talk about, and we are going to be talking about that in great detail because there's been a 6% uptick on that index. Let's talk about some other movers. Nifty Pharma hit a record high this month and advanced for the third straight month, mainly led by Ajanta Pharma and Ipca Labs. Remember, the last couple of days have been very positive for the Nifty Pharma index, and some regulatory approvals coming in. You've got the Aurobindo Lannett deal that has fallen into place, a fresh buy initiation, Shilpa Medicare from DAM. All of that looks really good for the pharma space. And in fact, Nifty Pharma hit a record high in the month gone by, so looking optimistic over there. What's not doing well is Nifty FMCG, declined for the second consecutive month on the back of monsoon delay fears playing heavy on that index. You've got Patanjali Foods and Tata Consumer that led losses. And lastly, talking about Nifty PSU banks that closed with a gain of 4%. So yes, mixed move coming in across the street. You've got some very big cuts on Nifty IT. On the flip side, you have Nifty Bank, Nifty Metal that have done really well, and of course Realty, Nifty Realty, throw that into the mix. Very good move coming in of over 6%. It's names like Prestige Estate and Phoenix Mills that have led the gain for the Realty index. Why are we talking so much about the Realty index? Because that is the theme of the day, given the kind of move that it has seen in the month gone by. Let's take that conversation ahead. We've got Mr. Vijay Agarwal, the Managing Director of and Head Infrastructure at Equirus Capital, joining us on the show. Thank you so much for your time. Good to be speaking with you. Give us a sense of how you're looking at the Realty pack, because we've seen cycles, right? You had a drought coming in the Nifty Realty before COVID. During COVID, it hit a very high peak, and then after that, it has started to slump. Once again, now we're seeing a little bit of an uptick. Can you help us understand if this uptick is here to stay? 6% move for the Nifty Realty in the month gone by. How sustainable is that? And are we at the beginning of a new upcycle?
Yeah. So thanks for inviting. I think we like 3-4 months back, we were all thinking that it's a doomsday for a reality. And the numbers which has come for a year-on-year numbers, they were very good in terms of pre-sales, collections, and that is also reflecting now in the price gain for a Nifty Realty stock pack, basically. So, see, if you see from the numbers of a square footage, number of units in terms of value, there is a gain from the year on year. So the gain was a slightly, it was ranging between a 4 to 6%. It was not big gain like we had seen in the earlier year, but there was a gain. So market is also getting a confidence that there is a growth. And secondly, we are all seeing a shift from unorganized to organized in real estate. So that is also giving a benefit to all the real estate listed companies, and their sales are growing much faster than the unorganized sector in the same micro markets. So that's another benefit we are seeing from that perspective. And third is our new launches. See, last year, everybody has slowed down their launches. And if you see in last 3 to 6 months, the launches have increased, new project launches. And if you see the unsold inventory levels have also come down. So it's overall very positive for the sector.
Hi, Vijay. Harsh here. Vijay, what's the sense with regard to geography? Is there a particular cohort geography which is doing better?
So I think Bombay market is more or less, you can say like a stagnant type. It's not showing much growth. Pune, Bangalore markets are really growing well. Even Hyderabad market has shown growth. You have an oversupply in Hyderabad market. And NCR, you're seeing a moderate growth coming from Gurgaon region. Noida is picking up well. So this is how the shift is happening. And I think this year, with the change in the Calcutta market, should also open up in a big way going forward.
Vijay, talk to us about how the demand is shaping up on ground, because I was just looking at a report and it says that housing sales have dipped 6% on a year-on-year basis in the quarter gone by across the top 7 cities of the country. On the other side, you also have pricing pressure because you have building materials that had momentarily become expensive on the back of the war. You've also got some price movement coming in cement, and labor costs are also rising. Do you believe that price hikes are the only way that this will be addressed by developers? And in turn, how is that going to affect demand?
I think the market always expects a 5 to 7% price rise as a normal, and consumers also pay for it. And I think the prices of cement and steel are also stabilizing. So I think that cost can be absorbed by the developer in this modest price hike, and they can still maintain their margins.
Vijay, in terms of pricing, is it holding up? Is there some bit of weakness? If for example, sales are coming off, have the people who are supplying it, or are the construction and real estate companies trimming down on price at all? Is that something you're seeing in the market?
No, I'm not hearing that people are cutting down the prices. See, some markets, what you will do is you will announce some scheme for a festival season, say a 5% discount, 10% discount, or you have a one-time payment schemes which are prevalent. But you're not seeing a price cut by the developers across geographies. They are maintaining their price.
Vijay, let's talk about two of the most prevalent themes in the real estate market over the last couple of years. One is, of course, the emergence and the very quick adoption of co-working spaces. And the second one is data centers. Let's start by talking about data centers first. What do you think the opportunity is like for India when it comes to data centers? And who do you think is best placed to capitalize on this data center opportunity, given that we're seeing a lot of private developers and governments entering into partnerships to do the same?
Yeah. So just to give you from the market size perspective, I think we are currently around 1.4 gigawatt, and another 5 years we should reach to around 10 gigawatt. That's the target. This is the projects announced by large corporates and other developers and data center developers, basically. And I think there should be a good amount of growth which will come. Maybe if it may not be a 10 gigawatt, probably we will cross 6 to 7 gigawatt in terms of delivery by 2030. So entirely it gives a big boost to the entire sector. And if you see a data center per se compared to a building, if you look at the cost wise, probably the office building will cost you 5 to 6,000 rupees. Data center will cost you around 55 to 60 crore rupees per SFT for the build out, and the technical server cost is separately. So definitely it gives a high rental value and corresponding cap rate gain to the developers. So see, it's again a highly technical business. So all the developers are playing in this field are tying up with one or other data center developers who brings their technical strength, and a developer brings his land acquisition and a construction strength and approval strength. And that is how they are building out this thing. So I think you're presenting Anantraj is already operating 25 megawatt and they have around 150 megawatt in pipeline, the data centers. And so I think that different developers are working on a different scale in the data center play. But yeah, you will see a few exits also because see, if you don't have a technical team, then you will struggle in this market. And today, when I'm speaking to the data center hyperscalers, they want the facility to be up and running yesterday. But you're facing a constraint of a construction timelines, then equipment supply, your HVAC equipment supplies, their timelines are like earlier 3 months, now it can go up to uh, year and a year and a half also. So generally, I was sitting with one expert yesterday, and we were talking. So he was saying that 24 months is the ideal time. People are trying to crunch it to 20 months, 18 to 20 months, depending on your equipment supply. See, building work you complete, but your electrical equipment, HVAC equipment, there is a time lag for supply. So people are following a strategy of booking the capacities also, partnering with this equipment suppliers where they are giving the upfront orders with some advance, with the delivery timelines, so that they are blocking the capacity and they are going to their customer saying that I can deliver this data center at XYZ dates, and why don't you come? A data center hyperscaler will come to them around 6 to 8 months in advance because he will come with a last mile, his specifications of the servers. Every 6 months, your server specifications are changing. So we are living in a very dynamic industry there. But you have a big demand for data centers, and I think everybody will make money in this play.
And last off, I'm curious to know where is the demand really coming from? One, you've given us some flavor around geography, but give us also some flavor around the cohort of customers. Is it in affordable housing? Is it in premium? Where is it that, one, developers are preferring to be at? And second, where is buying seen in terms of strength over the next 12 months? What are you forecasting in terms of the best place to probably, or the best cohort which will see growth?
I think the demand affordable, I think nobody is playing in affordable segment. Very few apartments here and there. Most of the listed players are playing in the premium, mid-premium and premium segment and luxury segment. We are seeing a new launches coming in the luxury segments, limited launches there. But premium and mid-premium segment is the cohort where you have a larger sales coming. See, if you see Bombay, 5,000 square feet, rupees square feet is you can say affordable. But for any other market, it's like a luxury segment. So the definition will also change market to market. But yes, everybody is playing on this mid-premium and premium segment where you will have a highest number of sales. Luxury, probably you will have a 10 to 20% and rest will come in this category. And the buyers are mostly the employed, self-employed and employees across. It's not only IT sector employees are driving the demand.
Okay.
You will see other sector employees also are the buyers in each of the markets now.
Understood. On that note, Vijay, thank you so much for your time. Really appreciate you taking the time out to speak with us and share your views on where the real estate sector back home is headed. Thank you so much for your time.
Thank you. Thanks
Thank
for
you.
calling.
Okay, viewers, let's shift focus and give you a broader view of how the F&O universe has shaped up in the day of trade gone by. And let's take it across to Sajid, who's joined us on the show for just that.
Thank you, Snehi. The Nifty closing below the 23,900 marks, just about the 23,850 levels there, down nearly 1/3%. But what we saw today was rollover which was happening through the day, especially in the Nifty July series where the open interest is up nearly 40%. So at the end of June series, we have nearly 75% rollover to the July series for the Nifty. There, Nifty Bank again, we saw some weakness coming in, again 1/3% down, but Nifty Bank also saw roughly around 74% of rollovers to the next month series there. Look at the constituents of Nifty Bank, you will see that a lot of shorts getting added, and in many cases towards the end of the trading session, we saw some long unwinding happening for bank for counters like SUC Bank, ICICI, Kotak or PNB. But overall, if you look at it, there were a few green ticks there, which was IndusInd Bank, Bandhan, AU Small Finance and Federal, where we saw some shorts getting covered there. But call and put writers were active for July series as the rollovers were happening. We saw 24,000 being a very active one with for call writers. 23,900 is where we saw some renewed push coming in from the put writers towards the end of the day. But if you look at the distribution for the July 7, which is next week's expiry, it's holding on for 24,000, and there's a 23,900 level which is also very active there. So you're going to see a good kind of comeback coming in tomorrow, because the put writers were active towards the end of the trading session there. But in the gainers, Solar Industries saw some shorts getting covered. Cochin Shipyard was seeing shorts getting covered, and Maruti saw some long build-up happening. There has been a positive buy report coming in from Jeffries for Maruti. KPIT Tech in the losers, down in nearly 5%. Tata Elxsi is down nearly 4.6%, and Eicher down on the back of the Delhi EV policy. So it's been weak through the day for Eicher there. But open interest gainers, Maruti saw good amount of rollovers happening to the July series. 361 saw some shorts getting built up, and Torrent Pharma also saw some 30% jump in open interest on the back of long build-up which is coming in. In the losers pack, you had Mazagon Dock, where we saw some shorts getting covered, Solar Industries shorts getting covered, and Cochin Shipyard. So defense and aerospace stocks were active in today's trade. So finally, the Nifty closing just about the 23,800 mark, where we saw some good build-up coming in yesterday and holding on to that level. And given the kind of put writing we saw towards the end of the trading session, we're going to see some uptick coming in tomorrow morning. Back to you, Harsh.
Okay, there you go. Some activity. Expect that tomorrow morning with regard to the day of trade of Wednesday. Let me go across to Meryl. She's here with some of the cues you want to keep on your radar for Wednesday's day of trade.
Yes, coming to you with a bunch of domestic as well as international cues that you should watch out for on the 1st of July. Starting first with India, it's the HSBC's manufacturing PMI which will be in focus, which is also going to be, and manufacturing PMI as a whole will also be in focus from a lot of international markets as well. Globally, US will be releasing its vehicle sales, while the Eurozone CPI and Bank of Japan's Tankan survey will also be on investors' radar. On the corporate actions front, back home, Network Technologies, Adani Energy Solutions and Z Entertainment will be in focus as their respective boards mull a fundraise, while City Pulse Multiverse will consider a stock split on the day as well. In the IPO markets back home, Asta Spintex, Advait Jewels, Waterway Leisure Tourism and NAC Packaging all will be in focus in the primary markets. And globally, central bank commentary will remain in focus with speeches from Fed Reserve's Chair Kevin Walsh, ECB President Christine Lagarde, ECB Chief Economist Philip Lane and also the Bank of England's Governor Andrew Bailey, all set to speak at an event. Finally, Japan will also be implementing higher international departure taxes and visa fees, which is a move that could have implications for outbound travel. So do watch out for all of these cues on the 1st of July.
Okay, so that's a list of all the events to watch out for and keep on your radar for the day of trade on Wednesday. But let's take that conversation ahead in terms of what levels you should be watching out for on the Nifty. We've got Mr. Deepak Dey, Senior Technical Analyst at LKP Securities, joining us on the show. Deepak, hi, good to be speaking with you. You know, we've been speaking to a lot of technical analysts who hold the view that 23,850 or 23,800 is the crucial support level right now for the Nifty, and we're very close to that level. What would be numbers to watch out for in terms of levels for the Nifty, both on the support and the resistance?
So definitely 23,800 has been a very crucial support for Nifty. Recently, we have seen that Nifty has been trading around that level, took support around that level, but then on the higher end, also, it found some resistance around 24,000, 24,200. Today, Nifty remained within the bands of 23,800, 850, and 24,050. So 200 points range was there, and the new series will start by Nifty hugging the 24,000. And I expect Nifty to remain around 24,000 in the next few days. And as long as it does not deviate from 24,000 decisively, I think the sentiment might remain sideways. Is seen to be in no hurry to give a decisive directional move on either side. So I think 24,000 and 23,800 could be the levels. Any decisive breakout from on either side will decide the future course of action for Nifty. For Bank Nifty, which has outperformed Nifty lately, from tomorrow, I expect that Bank Nifty might continue to outperform, and till the time it is remaining above 57,000, the sentiment might favor the bulls. On the higher end, however, Bank Nifty needs to take it out above 58,500 to witness a significant rally towards 60,000.
Okay. Deepak, your top picks and how you expect a reaction from auto tomorrow, because that will be in focus for Wednesday's day of trade.
So top pick first pick would be Indigo. The stock has recently reclaimed 200 days moving average on the daily time frame, and so far it has been comfortably sitting above 20 days moving average, and other moving average are in bullish crossover. The momentum indicator RSI is in bullish crossover, so everything is pointing towards a bullish outlook for the stock. So I expect the stock to move towards 5,520 in the short term. So I would go long in the stock around the current market price with a stop loss of 5,300, targeting 5,520. The other stock is Suzlon. The particular stock has given a downwards consolidation breakout in today's trading session with a rising volume. So I expect the stock to rise towards 61. I would initiate a buy call, keeping a stop loss below 57.70. So these are my two calls now. Auto index is looking a bit sideways to bearish in the short term, but if tomorrow numbers comes on the good side, I expect the space to recovery towards the recovery, and on the higher end, I expect the index to find resistance around 26,800. Once the index moves beyond 26,800, then there might be a significant uptick in the index.
Thanks for that view coming in, Deepak. So your top picks are Interglobe as well as Suzlon, and that's your view on the auto space as well, running bearish right now. But with that, thank you so much for your time. And viewers, I'm afraid we're completely timed out on this edition of Market Edge. From Harshmi and the team that put the show together, thanks so much for tuning in.